Hey everybody, Josh Sigurdson of World Alternative Media here, and we're joined once again by Mark Gonzales over at First National Bullion. We have a lot to talk about today because we have some interesting predictions coming out. We've gone over a few predictions in the past, but Zero Hedge put out a piece today called Closing Time on the AI Bubble is Sooner Than Most Think. Ed Dowd warns Iran brings global recession closer. Of course, Ed Dowd is a Wall Street money manager and financial analyst over at Finance Technologies. And he was talking about like worst case scenario for 2026, ending 2026 would be a $250 a barrel oil and 11% inflation as worst case scenario. Again, not necessarily that will happen, but right now, AI, the stock market is 45% AI and AI adjacent. There's evidence of a huge, obviously, a huge bubble, and oil is skyrocketing. Today, as we see from the Kubesi letter, $100 oil is back. Brent crude oil prices are now officially trading above $100 a barrel, up 42% in 20 days. This isn't going anywhere, my friends. Of course, we're seeing the continuation of the Iran war adding to the pain of all of this. And Ron Paul wrote a piece as well. It says, Ron Paul, as oil hits $100, Houthis open new front in Iran and warned about how this will affect the economy. I'm going to go into this and more today with Mark. But before we do, I urge people to check that link below, firstnationalbullion.com/schedule-consult/ has to be that exact link. It's in the description of the video. Do not shorten that link, my friends. And again, over there, you can withdraw from the system that enslaves us so much, so often, so that we've been so normalized to with digital finance and this move to integrate us into this digital system as we see inflation across the board. Over at First National, you can go and buy physical gold, silver, platinum, or palladium, hold it in your hands, put it in a vault, or put it in an IRA outside of the traditional IRA system. Stop waiting until it's too late, my friend. Stop sitting on your hands about this. This is important. When you sign up, you can schedule an appointment for a free consultation with our friend Mark Gonzales and get a complimentary investors package there as well. Just let him know when you sign up in the comments of the forum that he found him at World Alternative Media or WAM, W-A-M. All right, Mark, let's get into this. So, all this is in the description below. As I mentioned, we want real world solutions. And for what? Well, I mean, as I just mentioned, we have warnings that are pretty substantial potential $250 a barrel oil. I mean, it just went up 42%. Is it so beyond crazy that by the end of 2026, we could see $250 a barrel oil, considering that would just be a 2.5 times increase versus 42% in a very short amount of time? I think it's possible. Now, again, that's a worst case scenario. But then on top of that, the bubbles we see with AI, the shortages that we have caused by AI, by the way, when it comes to water, all that kind of stuff, the Iran war, inflation. My goodness, there's a bit to break into here, Mark. What do you think about these stories I just brought up?
Valid, very valid. Oil is the lifeblood of all economic manufacturing activity, right? So you get 250 oil. I mean, your loaf of bread is going to just go through the roof just due to transport cost, right?
Yep.
Then not to mention the cost it's going to take for Rouse or Kroger or whoever else you get your groceries from. Hopefully, it's from an organic place. But the cost of that's going to go through the roof. Your energy costs for yourself are going to go through the roof. It trickles down so damn fast. And I think Ed could be right. I mean, here's the thing. A lot of people, when we were talking about silver having a run back to 50 and beyond, it went to 120, right? It didn't hold, but that doesn't mean it's not going to find its way back there and then
Right.
some. So where the genesis of that run went was for starting at a base of $35. So you're looking at silver did a move of 3.5x, when most people didn't even see it coming. So to say that oil can't go 2.5x, or 150% it's not out of the question. In
Well,
fact, I
imagine what
think it's
that
going to
does,
be.
though, Mark, to people who are, going to fill up at the pump. I can't even imagine the pricing that we're going to see across the board on top of already insane, unaffordable pricing.
Pretty much, yeah. And that's the thing with the oil. The gas prices at the pump. I'm still in San Diego. I haven't filled up the rental yet, but then I'm not driving very far. I don't know what it's going to be. I'll tell you. I'm actually doing it tonight. But in Mexico, same thing. They just price it in liters. But if you do the conversion, you're paying universal around the globe for your food and your energy. right? There's no hall pass of value. Mexico offers a little bit better if you're going to be renting, and with some goods and services, but it's universal. The
Yeah.
manufacturing of oil is the basis of price for everything you use and consume because it has to be created through aspect of energy and it has to be transported. Those costs are going to be crippling. And we've been saying this for a while. So, let's look at the opposite side of that, right?
Mhm.
So when your cost of goods and services, your cost of living go up, what is the safe haven of monetary asset value that keeps you par, if not benefits you? Well, that's gold. And if you look at the argument of that, and a lot of people kind of say, well, gold's on a downtrend and it was higher, and so yeah, so who cares? If you
Mhm.
liked it at 120, liked it at 90, liked it at 50, you got to be liking it here. So if you take gold and you factor it into really all assets, primarily in the US, but this goes globally via the exchange, right? So take gold to real estate, gold to income, gold to Dow. Everything on the planet, including currencies, are right now devaluing against the asset or the true monetary marker of gold, right?
Yeah.
The wages, if you're paid in gold, guess what? Your everything else is devaluing against it. If you want to buy a house and you had gold, well, guess what? The ounces is taking less ounces to get that house. That is going to continue, my friends. Um, I still think we're in a little bit of this pullback. I think what we saw with yesterday's move and today's move, you're coming off a little bit of a dead cat bounce. I still have a target for silver right around 47 to $50, even though, to be all transparent, I have started initiating buys for my clients over the next couple of days because it's not a guarantee, and we did see
Yeah.
54. So all roads are leading to a reprice in gold because it's the one thing that is going to extinguish the debt to move forward. People need to realize that nothing has changed. We're still in a reprice, and you're seeing that all around you. So
Well,
I
Mark,
would
I wanted
say,
to ask, do we see the potential of like major bailouts? Is it even possible if we see one of these major bubbles burst? I mean, we saw the dot-com bubble, we saw how that affected things, but then of course a housing bubble led to major bank collapses, the CDOs, collateralized debt obligations, all that kind of crap. But with this, I just don't see where the plunge protection team or any of these guys can come in and actually save the day when we have AI bubble. Like you mentioned, 45% of the stock market is AI or AI adjacent. Now, AI is definitely going to continue climbing generally across the board because the technology is. But when we have, it's like the crypto market, when you have like a couple good cryptocurrencies and then 5 million other ones that suck, they're about like a cat or like, a donkey or whatever it is, when we see that, oh, everything is going up, well, that's a bubble that cannot potentially sustain itself. So when we see something like this, 45% of the stock market AI or AI adjacent, can that be bailed out? Because that would devastate, because people don't realize almost every industry now is now entangled in AI. That would devastate so many major companies across the board if we saw that bubble burst, which we have to.
yeah. I mean, you're going to get stimulus. You're going to get backdoor bailouts, whether they're made entirely public, like TARP was, or with quantitative easing. That's going to be a
Mhm.
different story. But you're right. When you see this increase in valuation, that is a bubble because everything that prices it is based upon debt, right? So you don't borrow your way to prosperity. No one's ever been able to do that, and no country that even has a dominant ability of yield in a nominal value has been able to do that. So I think you're going to see that. And it would make the most sense too, because if you go into this revaluation, as I anticipate, with the stablecoin, the Genius Act of that 1 to 1, and I've explained this before, you got one treasury for every one stablecoin, and it's supposed to be on par to keep it, well, stable. Yeah, my
Yeah.
ass. Because once you're all corralled into there, it takes nothing to say that the backing, now the amount of coverage is one treasury is going to back 20 stable coins. And if you do
Yep.
that, the math on that, what is that? That's 5 damn cents. If it goes to 50 with mathematical, you could, now you got 1 cent for every dollar. So why wouldn't you, if I was going to rob and fleece a country or have a final run at screwing everybody over, if it was up to me, Yeah, by all means, I would print the hell out of it. I would have all kinds of backdoor deals. I'd have stimulus. I might even raise rates a little bit to force the hand of action, because knowing that I have the ability to create this currency, either be it that I'm B of A or by the Fed, however you want to go down to it, they both have the ability to do it, Fed at the base level. I get the most yield for that. So why
Mhm.
wouldn't I bail my buddies out and give them extra? Then they can buy other assets on the cheap while the valuation is still there. And then everybody else, like you, me, we get left holding the bag if you're not covered.
Right.
Right. And another thing I want to bring up that I've talked about before. So not just Ed Dowd, and he's a smart guy. He is. I mean,
Mhm.
people should listen to what he says. He's right way more than he's wrong.
Yeah, I've always liked him. He's a good guy.
Yeah, but another guy came to mind today that I haven't talked excuse me, in a while about, and that's David Webb, right? I
Hmm.
just got off a phone call with someone I met at Red Pill Expo, and we had a pretty decent conversation about it. And keep in mind, David Webb, if you don't know who he is, he's a money manager from the Ohio area, and he now lives in Stockholm because he started to discover how at the state level in this country for the last 2.5 decades, and at a municipality and country level for the rest of the world, they've changed the structure of how assets are held and where they're held, excuse me, around the world in depository trust, right? So
Yeah.
if you really break this down, and he does a really good job on a video, I suggest everybody watch it if you're not readers or don't have time. It's about an hour and a half. Go to YouTube, look up David Webb, The Great Taking, and he breaks down how these assholes have methodically changed the structure of ownership. And there's actually preceding case uh, settlements where JP Morgan was awarded client assets back in 2008 because they were part of the protected class.
Yeah.
So yeah, do I see stimulus? Do I see bailouts? 100%.
Hmm.
That
And
causes the
bail-ins.
most pay for us. And well, bail-ins for one, right? That's going to shore up the banks, but it's not going to protect all the buddies. That just
Right.
keeps the banks and the derivatives afloat. But if you want to increase the money supply and really have a Wild West, then yeah, you're going to give backdoor stimulus on balance sheet that is going to now been settled up due to the
Well,
conversion.
and then people better bet that banks, by the way, are heavily invested themselves in AI when we're dealing with also their own transition to their own digital formation. David Webb, the great taking you just mentioned, I just wanted to throw that in there again for anyone that might have missed it the first time. And yeah, very interesting, Mark. We know 63 central banks signed on to bail-ins back in September of 2024, which allows them to basically just take your money and it's gone. And it's gone. Now, I wanted to close this off because I know you're a busy guy, Mark, and you have to get going right away. But I wanted to quickly just mention to everyone once again to check that link in the description, firstnationalbullion.com/schedule dash consult slash. Sometimes I feel like I'm a rapper or something when I'm going through that. It's hard to, but it's in the description. It's easy to find, and there people can actually protect themselves. And I really urge people to take that seriously. It's easy to say, well, we'll see what happens. It's easier. It's easy to make mistakes. I think it's important. It's more difficult to take it upon ourselves to not just complain about problems, but actually access the solutions because, we are living in a very crazy time that could snowball at any moment. And it's meant to because it's built by design to put us in positions where we are dependent on said system. So when you go to that link, you could buy physical gold, silver, platinum, or palladium, hold it in your hands, put it in a vault, or put it in an IRA outside of the traditional IRA system, as I mentioned, and get that free consultation with Mark. Get that investor's package. Let him know that you found him at Wham. And all the same, Mark, as we close this off, I always really appreciate the work you do and the insights you bring. Do you have any final words before we close this off regarding why it's so important for people to jump on and actually do something about this, take advantage of the opportunity before them, and get into gold, silver, and other things?
Well, outside of it being the only asset that you can own or possess, and as David Webb and I discussed in length, without any counterparty risk to carry you from one structure to the next, yeah, that pretty much says it all. But let's just look at things from a common sense objective. And this just came to mind because I knew you were going to ask me closing thoughts. So, uh, two mornings ago, I went and got a breakfast burrito. I hung out at the beach, had an orange juice.
Mm-hmm.
Damn thing cost me $24, right? This back in 2008 was maybe $3. So you got over a 10x increase in your cost of living. And if you're walking around thinking that everything's going to be fine, you got bigger problems
Yeah.
because that's not going to stop. Now, let's take for an example from 2008 in the collapse until the equity markets actually got back up to par. It took what, 15 years? So again, just know that it's all an illusion. It's digits on a screen. They can go up and down, but as long as you're sucked into that belief and that mentality of brainwashing that the system is sound,
Hmm.
you're going to get screwed. You're going to get screwed hard. So just take it for what it is. Open your eyes. You got eyeballs. Pay attention.
Yeah, if you don't think anything is going on, you got another thing coming. My friends, that link is in the description, and I urge people to get on it today and just, take these crises seriously, but don't be afraid. Look at real world solutions that are out there. I think it's very accessible to most people, and it's just an obvious thing to do. When you see a freight train coming, you either step off the tracks or I don't want to waste energy stepping off the tracks. I'm going to just let it hit me because, what are we to do? What are we to do? Don't give up. There are options out there to actually support yourself and prepare yourself for the future for you and your family. So, anyway, check that out. And as always, Mark, I appreciate you joining us, and we'll be talking with you again soon.
Thank you.